Hi, and welcome back to Cheeky Crypto. My name is Nick, and today we are discussing Bitcoin. We've got a lot to discuss. There's a lot to go through, lots of data to kind of digest, and lots of things I need to kind of communicate to everybody out there who is willing to kind of take a maybe different approach to the market and actually start looking at things maybe through a slightly different lens. Okay, so this is going to be maybe complicated, maybe not. I don't know. You let me know if this is overcomplicated for you in the comments down below. But let's just jump right down into today's video, right? We're going to start things off with just news, right? So simple stuff just to kind of get things rolling here. So Bitcoin's price skyrockets to 29,200. Actually went higher than this yesterday. We'll jump into the charts in a moment and to take a look at that. But this is all to do with how the Fed chair is basically hinting at no more interest rate hikes, which could mean the start of a pivot. And of course, from a retail point of view, a retailer's point of view, I guess that kind of gets you some encouragement into thinking maybe the price is going to be going up. However, we know that if there's a pause, and it probably will be temporarily bullish, and we'll probably see some green in the market, a pivot, as in interest rates start to decline and they start to go the opposite way, then we actually see historically a crash in the stock market. And considering crypto is related to the stock market and sometimes mirrors that, we are potentially going to be looking at a crash in crypto at the same time. Now, this Fed pivot is going to be a critical moment because it is going to be indicating one of the last opportunities to get in ahead of the next bullish market, right? So a Fed pivot is essentially that kind of warning to everybody to say there's a last opportunity. When we have this move, this crash after a Fed pivot, historically speaking, once you have that, the next move is very, very parabolic, I guess, is that's a word we want to kind of throw out there, to the upside. It's very, very powerful moves to the upside afterwards. So it's kind of like a big warning sign. It's a last opportunity, right? So a pause, we'll probably see some green in the market. A pivot, we drop down in the market, okay? This isn't really going to be anything surprising. We talk about this quite a bit on the channel. Now, as we kind of move on out of here, I want to talk a little bit around some data. Now, for a lot of you guys who are familiar with the channel, we have a membership platform, membership.𝗕𝗘𝗪𝗀𝗀𝗪𝗀𝗪𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀 membership, there's 7-day free trial across all the different plans. There's lots of different options to kind of choose from. One of the things that you kind of get access to here, if you're on that kind of tier, is data. We have a couple of different things within our data zone. We have accumulation zones. This is where I think prices of altcoins are heading, and you can kind of look at that information and cross-reference with your own TA, that kind of stuff. And then we have a data portal, okay? And if I click into the data portal, it loads up this, right? And this is essentially on-chain data aggregated from many different places and pulled together into a suite of analysis for you guys to kind of digest. And we're going to be jumping into the Bitcoin analysis today. In here, we do have access to Bitcoin, Cardano, Chainlink, Dogecoin, Ethereum, Litecoin, XRP at the moment, and I'll continue to add more as time progresses. But we're going to focus in on Bitcoin. So if you want to get hands on this data, head on over to membership.𝗕𝗘𝗪𝗏𝗀𝗧𝗏. Link is in the description below. It's a 7-day free trial. Available on all plans. You can take that out, and if you don't want to continue, just make sure you go to your profile area, go to the subscriptions and cancel. If you do not cancel, you will be charged. But let's jump into the world of data. Okay, so here we have Bitcoin. This is just an overview. It gives you kind of the price action of where Bitcoin currently is. We have the all-time high, the all-time low, although that's kind of redundant. I do mean to change that to like the last or the lowest point in the last 365 days. I'll change that. We're currently down 57% from the all-time high, 709 days since its all-time high. 19,519,418 BTC in circulating supply out of the 21 million, right? So we know that we've pretty much got all of the Bitcoin out there, pretty much, right? So 19.5 out of 21 million, which basically means a Bitcoin halving event is only going to halve the returns on the existing 1.5 million that's yet to be mined, right? So we already know that the majority of the supply of Bitcoin is already out there, and so it's more important to focus on the existing supply than it is to focus in on the 1.5 million that's yet to be mined. As in, a Bitcoin halving event makes it harder to earn that 1.5 million, but there is 19.5 million already out there, right? So it's important more to focus there than it is to focus on the Bitcoin halving event, which really will not have much of a catalyst in terms of the shock to the supply and the demand elements like it did historically, right? If you go way back into like 2011 and stuff, then yeah, when Bitcoin had a halving event, it was more impactful to the circulating supply of BTC. Now, however, there's 19.5 million in circulation. It's hard to think that a Bitcoin halving event is going to have any kind of impact on the supply element, which means the supply and demand imbalance or balance it's not going to have an impact on that, not too much anyway. So interesting to kind of see. Now, if we take a look at the network analysis here, we can see that there are 48.7 million addresses for Bitcoin, right? And I want to call this out as it's great to have these total number of addresses on the increase. It's great to kind of say, look, we've got 48 million addresses. Isn't it fantastic? But the reality of the situation is vastly different. It is not that there are 48.7 million addresses that actually hold Bitcoin. And I'm going to show you why in a moment. But you can see 48.7 million addresses do exist, which means there's 48.7 million addresses that were created by people at some point. Not to say that there were 48.7 million people necessarily, but multiple addresses could have been created by an individual, for example. Now, then the last 24 hours, we've seen 952,000 addresses active, of which 653,000 were receiving Bitcoin and 602,000 were sending Bitcoin. We had 293,000 transactions in the last 24 hours at a cost of $544 million. $544,000. That's about 18.99 Bitcoin in transaction fees. There were 134 blocks added in the last 24 hours, and the current block height at the point of pulling this data was 813,111. The daily inflation rate is 0.0045 with 1.64% yearly. New issuance in the last 24 hours for 837 Bitcoin, which will obviously be halved next year. And that was about 24.87 million. Okay, so we know that that's a pretty decent return if you're running miners at the moment. That's going to be harder, and obviously I've aired my issues and my concerns with the longevity of Bitcoin if price does not reach those significant high levels that are required. This is really where things get interesting. So as I said, there's 48 million addresses, right? But only 23 million addresses have more Bitcoin than 0.001, which basically means they're dust anyway, and pretty much anything lower than this just doesn't really exist, right? And so it's quite interesting that less than half of the total addresses actually contain any form of Bitcoin. It gets worse as you kind of scale up. But before we start scaling up, I want to just kind of point out we have 10 different wallet sizes. This is over 0.001, over 0.01, over 0.1, over 1, over 10, over 100, over 1,000, over 10,000, over 100,000, and over 1 million. And this is native units. So over 10 native units, or over 10 Bitcoin, over 100 Bitcoin, over 1,000 Bitcoin, right? And so what we're doing here is we're able to kind of say, okay, how many wallets have over 0.001? Well, it's 23.5 million wallets have more Bitcoin than 0.001 in them. And then if we were to scale this up a little bit further, we'd have 0.01, there's 12.3 million. At 0.1, there's 4.4 million. And at 1 Bitcoin, there's a million, right? So let's bring this all the way back down to the very bottom here. What do we see? Well, we can see that these wallets had increased in 365 days ago, from 365 days ago, an increase of 10.06%. Okay, so we were at 21.385 million, and now we're at 23.535, right? And so we know that there's been an increase in these dust-based wallets, these wallets that have a little bit of Bitcoin in. There's an increase on them over time. And you can see this as well on our graph, right? We can see in 2018 it corrected down, and then we start to see this steady increase to the upside. We have to bear in mind that 0.001 Bitcoin really is it isn't a lot of money, and therefore a lot of these people probably don't care too much about it. We will note, though, that this has actually been fluctuating recently. In the last 30 days, it's actually down 2.26%. So people were pulling out their money in the last 30 days at this particular level. And I find that quite interesting as well. Now, as we go up to the 0.01, we can see that these are up 14.19% in the last 365 days and down to 0.9% in the last 30 days, right? So we can see again the black line here, and you can see a little blip here as it's kind of moving back down a little bit. Go up a little bit further and we have the 0.1 Bitcoin, okay, up 16.64% in the last 365 days and actually up 0.07 in the last 30 days. Okay, there's 4.4 million of these wallets. Now, as we get into the more meat of the, get into the more meaty parts of the analysis here, over 1 Bitcoin. These are retail investors that have often aspired to accrue at least 1 BTC. And at this point, a Bitcoin hovering around $28,000, $29,000, we have to appreciate that they've got a pretty hefty investment from a retail standpoint, right? There's over 1 million people or 1 million wallets that have over 1 Bitcoin in them. And it's up 12.07% in the last 365 days. But it is down 0.23% in the last 30 days, down 0.36% in the last 14 days, and down 0.1% in the last 7 days, which means profits are being taken or they are coming out of the space a little bit. Okay, now this is interesting because this is something that I think is likely to be on the increase, and people will disagree potentially with me here. And I'm less concerned about the 0.001s and the 0.01s and the 0.1s. I am more concerned about the people who have more than 1 Bitcoin, right? They've got $20,000, $30,000 invested in Bitcoin, right? And it's at this point that we have to consider that these guys might start to struggle at some point. Now, this is only because of an economic climate that we find ourselves in, right? We can see that the interest rates are high. We can see the inflation is still a problem. We can see the cost of living on the rise. We can see people struggling day to day. We see debts at all-time highs and savings at all-time lows. And so it's important that we understand what these might mean for retail investors. And as retail investors who have, $100 invested versus that of $20,000 invested are two very different circumstances. And I expect that ultimately 1 million wallets here to decrease a good 20 or 30% as times get harder. As we come up towards Christmas, as people starting to see that they might need to pull out some investment or pull out some money, pull out some funding to maybe get through the next couple of months, as winter kind of creeps in, as energy bills are on the rise, mortgage renewals, and so many different things. We also have a housing crisis that not so many people are willing to acknowledge yet. We are starting to see a lot of Airbnb properties, for example, actually starting to go on the market as they are just not being able to kind of let them out. As basically an increase in rental properties, as an increase in properties for sale at a specific size. And we do see issues with downsizing also occurring as well in terms of property. And so I do find that it's interesting kind of this narrative that these retail investors, they've invested, they're just going to hold. I don't think they're going to have the ability to just hold. I think that they're getting pinched from multiple different angles, which is the point here of all of these interest rate hikes. They are basically the Fed and the other government bodies around the world are essentially what they're trying to do is suck liquidity out of the market. They want the market to shrink. They don't want it to expand. And so at the moment, we haven't really seen these particular retail investors of 1 Bitcoin or more really shrinking. We see them on the increase. And so I do expect us to start to see a bit of a turn here, specifically at this level more than others. But, we'll see how that kind of plays out. Ultimately, I think a Fed pivot will happen when the pain that is felt from all the interest rate hikes and the inflation, the cost of living is at its worst, meaning that people need their assets at that particular moment. It's when things are at the worst that the pivot will come, and which is why historically you see a 50% crash in the stock market at that time. Essentially, people need the funding because the Fed interest rate hikes were so severe that basically meant that they ran out of money. They ran out of liquidity. They had to pull it. They had to extract it. And as such, I think that's what we're going to see here in crypto at the retail layer as well. Now, I could be completely wrong, but that's kind of my expectations and my thoughts and opinions on what I'm seeing here. It doesn't make sense for retail investors, specifically if they're only investing, $20,000 or so in the market, to just hold for no good reason. They were buying, all the way up here at $30,000 in 2022, and all of a sudden the price is right back up there. They are struggling. Their mortgage might be up for renewal in terms of the interest rate hikes. You might have double the mortgage payment that you have to make, and so forth. Or, there's a lot of other things that are going on in the real world that could potentially cause a catalyst to sell pressure. And once a little bit of selling pressure occurs, you might start to see a compounding effect of that. Okay, but that's 1 Bitcoin or more. But if you go up into the 10 Bitcoin or more, you see already the high net worth individuals pulling out. So up only 3.4% in the last 365 days. You can see that these guys have come out 0.7% decrease in 30 days, 0.76% decrease in 14 days, 0.75% in the last 7 days. And you can see here on the chart, this black line is decreasing. High net worth individuals are already extracting their liquidity from the market. So 156,000 wallets that now have 10 Bitcoin or more. Okay, so interestingly enough, we'll keep an eye on this. As we go up into the traders, though, traders don't generally care too much, and it's a very flat line. 100 Bitcoin or more, professional level traders, and these are very interesting wallets, right? They either follow the price action very, very well, or they just trade in and out all the time, right? And so it's incredibly flat across the entire spectrum here, essentially, across time as well, for Bitcoin. So you can see the black line is just pretty much flatlining across. It doesn't really care too much what the price does, goes up or goes down. They are coming in and out of their holdings all the time. There's 15,978 wallets here, and they've been fluctuating around this level pretty much consistently for years. Okay, so there isn't anything to note here at this particular level. Business as usual for the traders who are sucking liquidity out of the market. Now we get into the whales. All right, the whales are down 5.71% in the last 365 days. Now, as we were saying, high net worth individuals are starting to sell a little bit. Retail investors are starting to sell a little bit. So what are your whales doing? The whales are buying a little bit, right? And so it's always imbalance. There's a buyer, there's a seller. And if there's a seller, there's a buyer, right? And so our whale investors here, our 1,000 Bitcoin or more, they've been aggressively selling to the retail investors earlier part of the year. And now the retail investors are starting to sell. You're starting to see a little bit of an increase here. Okay, now this could be because they want to keep the price buoyant. They don't want the price to drop too significantly. So what they're doing here is they're just trying to maintain the price at a particular level. Wouldn't surprise me, considering the amount of low volume that's in the market at the moment, that's what's going on. We see manipulation. We see some selling pressure, but we're also seeing the buying pressure just to prevent the price from plummeting just yet. I think there's a master plan here that eventually we will see the moves to the downside, but it isn't happening yet. And it might just be that they're going to use the Bitcoin that they're accruing to help push the market in that direction. But you can see here in the last 30 days, it's actually up 0.2%. In the last 7 days, up 0.55%, right? So we know that when we see our retail investors selling, we have our whale investors buying. Okay, so always in balance. Now go up into 10,000 Bitcoin or more. This is your very large whale investor all the way through to institutional level investors, right? So not your micro strategies though. I mean, they are more 100,000 Bitcoin or more, but this is your institutional level investor, your Elon Musks of the world, I guess, right? And so what do we see here? Well, we see these guys historically accumulate in the bear market. So you can see these guys are actually up 5.94% in the last 365 days. They are actually down 6.96% in the last 180 days. And then from that move to the downside, they haven't really changed, right? So it's been kind of hovering around that kind of initial dump, right? So we can see here that we have 107 wallets. We peaked at 115 wallets, and we are hovering basically between 107 and 108. Sometimes we might drop down to 106 wallets. We are down in the last 7 days 0.93%, as in we dropped one wallet. And you can see here on the black line, if I see if I can zoom in a little bit here. you can see it comes down as price was going up. So sucking liquidity out of the market. They were buying in the moves to the downside during the bear market. And as soon as 2023 started, they started to see this move to the upside, and they started to use that to exit their positions. Okay, so they were basically selling the Bitcoin that they had accrued during the bear market, specifically at the kind of like the lows of around mid 20s or lower, specifically into the FTX lows. We could see that they were accruing, and then as price kind of pushes up towards $30,000, they are using that as exit liquidity. Now, don't get me wrong, this is not perfect because it doesn't make sense that they are just cost neutral in this, which is at the moment what they appear to be. Instead, what I think is going on here is it's just pure manipulation of the price action. Something that we saw back in 2018 was that they accrued during the bear market, and then they flooded the market with excess Bitcoin. You can see here that the 2017 high was down here. Okay, they sold into the highs. They then started to buy up as it started to go down, and then they used that Bitcoin to drag us right down into the Bitcoin bear market low of 2018. Then, of course, they start to accrue in 2019. Now here you can see that they essentially had the 2021 highs. They were using that as exit liquidity again. And again, they were looking at basically accruing during this bear market, but they've yet to flood the market. They haven't dumped it on the market or anything like that. And that's not to say that they will. Essentially, they could, of course, just be looking for the next bullish market to sell into, to kind of sell off their holdings that they've been accumulating. But for the most part, that is what it is right at this moment in time. They have been coming down as I was kind of expecting them to do as per the history of their movements, right? It's not to say that history repeats itself all the time, but it's an interesting one to kind of keep an eye on. 100,000 Bitcoin or more, well, it hovers around 4 or 5 wallets. We can argue that there is someone here pushing the price of Bitcoin at these levels. But for the most part, in the last year, it has been a 20% drop. Otherwise, it's hovered around 4, hasn't changed. So it's interesting to kind of take a look at it from this point of view, where we see the amount of Bitcoin in the wallets. We see the balance of selling and buying across the wallets as well. And we can start to see there's a little bit of accumulation at the whale level, and a little bit of selling pressure at the retail layer. And I think that's going to be something that has to worsen over time. Now, I can, of course, jump down into this from a dollar point of view if you really wanted to. All the data is here. I'm not going to go through all of this in this video. It's a lot to kind of digest, but you can take a look at balances that have a dollar value to them rather than a Bitcoin value to them. It also has some interesting analysis there. We also have the supply breakdown of Bitcoin. So we can see, you know, where does the money actually sit, or where is the volume of BTC actually sat. And you can see that actually there's a pretty significant amount of Bitcoin sat at some of these real wealthy levels, specifically when we talk about how much Bitcoin is held by wallets that have over 1,000 Bitcoin in them. It's actually 7.6 million Bitcoin. And it's very, very interesting to take a look at, right? So 7.64 million Bitcoin is held by whales, which is very, very significant. But, you know, if we go down into liquidations in the last 24 hours, we saw $33 million of liquidations. Binance is the top spot for liquidations in the last 24 hours, with a total of $9.1 million of liquidations, right? OKX is in second spot at 8.8, Bybit at 8.1, Huobi at 4.7. Okay, so interestingly enough, short positions are the ones that are getting squeezed at the moment. They're the ones getting liquidated. So we have 61.73% for Binance on the short side. Overall, though, it is 57.96% short positions and 42.04% on long positions that have been liquidated from BTC. So a lot of liquidations, nothing major, though. We often see major movements more in the hundreds of millions. This isn't anything like that. That's because there isn't really a lot of volume in the market, not a lot of activity. And so it's really obvious that we're not going to see those kind of FTX situations where we have, you know, close to $1 billion in liquidations. But here we can see some pretty sizable for the times that we find ourselves in. In terms of total value locked, $189 million yesterday of total value locked. Interesting to kind of see it from this kind of point of view. It has been on the increase recently, but it is still decreasing overall. And so, yeah, interesting to kind of take a look at it from these kind of points of view. Yeah, good kind of get into the data and that kind of stuff. But let's move on, right? Because Whereas it's great to kind of take a look at all this stuff. I think there's a lot of information to kind of reflect on, and how I feel that retail investors are not going to fare too well in the coming months. But hopefully I am wrong about that. Let's jump into some technical analysis because, like I said, we've got some interesting things going on in the TA as well as all of the on-chain data and that wonderful stuff. This is a longer video, I realize that, so I apologize. But let's jump right down into this. So what do we see here? So this is total 2. This is the total market cap excluding Bitcoin. Okay, and here we have the total market cap including Bitcoin. Okay, and so what do we see in terms of what is going on here? Well, we can see here that total market cap is increasing ever so slightly. Okay, from a excluding Bitcoin situation, you can see actually it's been coming down a little bit. Okay, so we can see here coming up, and we can see here actually holding up quite well because of Bitcoin. This side not holding up as well as those altcoins have started to kind of pull back a little bit. This tells us that money is flowing out of altcoins into Bitcoin. This is also visible from our dominance, right? Bitcoin dominance here we can see is on the rise. It's at 52.51%. This essentially tells us that money is in fact flowing out of the altcoins and into Bitcoin, right? And if we take a look at total market cap, you can see here in the last week it's increased, right? In fact, it's actually over the last few weeks, it has increased. We're at $1.1 trillion, right? Bitcoin dominance has been moving up quite rapidly during this period. So we can see that money is coming into the space, but we can also see that money is heavily disproportionate between Bitcoin and that of the altcoins. So money is flowing out of alts into Bitcoin, as well as some fresh Bitcoins, fresh powder coming in to Bitcoin. And so we can see here that 52.51%. Now, I've said before, I feel that 50% area on the dominance chart is roughly around about right, where I kind of see the next kind of moves for the space kind of occurring. We could potentially push to 55, maybe 60% if we really needed to. But for the most part, I'm expecting us to kind of start to see moves more down in the market, right, overall. And this is something that we see in terms of technical analysis, but also what we see here from a dominance point of view. Bitcoin dominance, I think, is about to kind of start to reverse. That's not to say that money is going to flow out of Bitcoin into altcoins. You might see pockets of that. My expectations are, though, that profits are probably going to get taken off the table, and we're going to see Bitcoin dominance either stagnant, as in trading sideways, or disproportionately drop down in terms of altcoins, just because more money has currently sat in that particular pocket. Okay, so I think because more money is sat in Bitcoin, Bitcoin's dominance is going to drop down harder, and therefore we're going to start to see more of a balance between altcoins and Bitcoin again. We'll probably see Bitcoin dominance dropping back down towards the 40s. 47 would be an interesting kind of level to kind of see get hit. Now, when we take a look at not just kind of total market cap and where we feel all that's kind of heading and all that kind of stuff, but if we take a look at the CME for Bitcoin as well, this is the futures market. We still do have the two CME gaps on our chart here. Okay, we have $34,000 to $35,000 CME gap up on the higher range, and we have the $20,000 to $21,000 on the low range. Both haven't been hit yet. We're both kind of stagnant, just waiting. There was a CME gap just in here as well that got filled very, very quickly, by the way. It was here at $27,000 to $27,500. That got filled out. That's not a problem at all. So yeah, for the most part, what do we see? Well, we can see that Bitcoin's price will probably, at least in my opinion, be heading more down towards 20 to 21 than it is to the 24 to 34 to $35,000 CMEs. But I'm hopeful that maybe we can see a Fed pause. A Fed pause would put some green in the market and may actually see us moving up towards that 34,000. So it'll be interesting to kind of see. But from a technical standpoint, that's not necessarily where I sit. Of which, if we jump down into the weekly chart here, we can see that the price action is actually overbought on the daily and 8-hour charts. It's progressing upwards on our stochastic RSI, heading up towards the overbought range as well weekly. So I'm not overly confident thinking that we've got a lot of longevity to this one, where we can see, a $34,000, $35,000 CME gap. Instead, I'm thinking that we are likely to start a retest of the 200 EMA. which actually is sat at about 25,786. And, we did break above the 50 EMA, which at the moment puts the bulls in control. But momentum, as I said, is running out. We can see this from low volumes. Let's just take a look and put this into perspective. Down here, you have our volume profiles, right? A lot of people have been calling 2023 a bull market because they saw this rise to the upside here. This is more of a bear market rally than anything else. And this is also indicated from a decrease in volumes that you can see going on. Even during these moves to the downside, volumes were higher than they were, taking us up to the higher side here in terms of price. So we know that this is a divergence. You don't really typically see a decrease in volume and an increase in price. This is something that is very unusual and usually is an indication that there is something else at play here that is not as simple as there's extra demand coming in, dragging the price of Bitcoin higher. Instead, I would say it's probably more to do with manipulation of Bitcoin's price action, whether this is market makers or whale players, but essentially all that is happening here is liquidity is getting sucked out of the market. Okay, so just put this into volume profile, just to put it into context for you, where the previous bull market was. Okay, as you can see, this is March 2020 crash. Okay, we even have the volumes down here in December of 2018. Look at the volumes now versus where they were in 2018's bear market, right? Very, very similar, but in fact, even lower. Okay, and we can see also here just the sheer level of volume that comes in the bullish market versus just non-existent volume. So we have to be really open-minded to understanding that it's great that we can see some green in the market as in price has gone up, but really, does the data support such a thing? Not really. We are starting to see some retail investors selling, which I think is a necessity for us to get into that bull market. We do need to see retail investors, unfortunately, at least a portion of them, 20 to 30% of them, sell their assets to the larger investors, the investors that are yet to come on in, that do have the capital to actually increase the volume and push the price to a level where you might actually start to see demand increasing. So we haven't seen that yet. We also can't see the volume in the data here to say that we've got some fantastic bull market situations occurring. So we obviously do have the Fed issues, we have the interest rate issues, we have the housing issues, we've got the inflation issues. There's a lot of things going on, not even to mention potential of World War III and all these other things going on in the real world, that it's hard to think that we're in a bullish market just yet. But I do think we're getting closer. And this is to kind of say, when I do think that it's going to be a last warning, essentially, when that Fed do a pivot, I think that is when we're going to see everything collapse down, and that becomes the last opportunity to get into these altcoins and into Bitcoin before the next bullish market starts. But I've gone through a fair few things. There's a lot of data to kind of digest. Let me know what your thoughts are and opinions are down in the comments below. Sorry, I've kind of rambled on for 31.5 minutes or 32 minutes now. If you found it useful, smash that like button. I do appreciate that. If you're new to the channel, subscribe. Don't forget to join us down in Discord. Link is in the description below. If you want to get your hands on that on-chain data, why not go ahead and check it out? Membership.𝗕𝗘𝗪𝗏𝑖𝑞.io. We are offering a 7-day free trial, so you can try it before you buy it, and all that kind of wonderful stuff. Until the next one, though, guys, have a fantastic day.